Hello, welcome to the European Open briefing for Thursday, April the 6th. I'm Rafi Barajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the focus is pretty much on the dollar this morning. We have quite a bit of risk aversion ahead of that important meeting between the US and Chinese presidents that's due to begin later today. We also have some concerns about North Korea, which is probably will be discussed by the two leaders, as well as trade policies. Adding to today's risk-off sentiment was disappointing services PMI out of China, and that also hurt the Australian dollar. While the euro, we saw a big drop a short while ago on dovish comments by ECB President Mario Draghi, and in commodities, oil has turned lower again after a surprise build in US crude stocks, according to the EIA data out yesterday. But let's start now with the dollar-yen pair. We can see yesterday we saw quite a big jump upwards. With the dollar yen came close to hitting 111.50 yen, and that came after stronger than expected ADP employment numbers. The ADP report showed private payrolls rose by 263,000 in March versus expectations of 187,000. So that was quite a big surprise on the upside, and it points to a strong reading for Friday's non-farm payrolls report. We also had the ISM non-manufacturing PMI yesterday. Although it was fairly healthy at 55.2, it missed estimates and it was down on the prior month. But the reason why the dollar fell soon after the ATP numbers was because of the Fed's minutes, where policymakers discussed trimming the central bank's $4.5 trillion balance sheet. Most members thought it would be appropriate for the Fed to phase out reinvesting in its portfolio of government bonds at some point later this year, and that's one way of tightening policy, though. So that's why the markets reacted negatively to that. And despite that, the tighter policy, we saw U.S. Treasury yields fall back, but that's mainly due to the overall risk-off sentiment and also negative reaction in the markets. So instead of treasury yields being boosted by the trimming of the Fed's balance sheet, we saw it fall to it's now approaching the 2.30% level again, the treasury yields, and that's an important support level. As we see over the past 2 months, it's managed to, every time it hit 2.30%, it's bounced higher. So if it does drop below that, it would probably be very negative for the dollar. And also it's worth mentioning that in the minutes, they also mentioned, policymakers also talked about US stock prices. They said some participants viewed equity prices as being quite high relative to standard valuation measures. It's fairly rare for the Fed to comment on share prices, so the fact that they did that at the March policy meeting means that there is some concern that US stocks are overvalued, and that led to a sell-off in major US indices yesterday, where the stock markets closed lower. And also, but the focus today will be, though, on the meeting between President Trump and President Xi, where its markets will be watching to see whether the two leaders get on and whether they will reach on any agreement about trade and on North Korea. And also dollar index, though, even though dollar yen has been falling due to the other currencies falling against the dollar, with the dollar index is actually has managed to hold above the 100 level in the past few sessions. Moving on to the Australian dollar now, we can see that the Aussie has, it dropped to a near 4-week low earlier today, and that came after disappointing Chinese services PMI. The Aussie is quite sensitive to the overall risk sentiment in the market, as well as to the economic data out of China, given that China is Australia's main trading partner. The CAGR in services PMI, which is a private survey, it eased to 52.2 from 52.6. in March. That was the weakest in 6 months, and it contrasts to the official PMI, which actually rose to almost 3-year high. So there seems to be a bit of divergence between the official PMI surveys and the private Caixin surveys, so that does raise some doubt about the reliability of these data. And look at the euro now, because we had a very big drop. The euro dropped to a 3-week low 1.0628. We can see here that came after ECB head Mario Draghi was speaking in Frankfurt. He said that I do not see cause to deviate from the indications we have been consistently providing in our introductory statement. So basically, that's basically a signal by Draghi that the current ECB policy is likely to stay until there is sufficient evidence that inflation is on a sustained path upwards. So no change there, but it's a reminder to the markets of where the ECB stands. Although we have been having some mixed signals from other ECB policymakers, so that had been supporting the euro in recent weeks. So that's why now we saw this big correction after Draghi's comments. A quick look now at the pound, because the pound seems to be holding relatively well, just below 1.25 level against the US dollar. The pound was supported yesterday from better than expected services PMI. There had been concerns that the UK economy, especially the service sector, could be slowing due to rising inflation and low wage growth squeezing disposable incomes for households across the UK. But we saw the UK services PMI rise from 53.3 to 55 in March, and that was well above estimates of 53.5. So that's been positive for sterling. And finally, in oil, we can see that we had a bit of a drop yesterday, and that reverses some of the prior day's advances. We saw US crude stocks rise unexpectedly by 1.6 million barrels. Last week was expectations of a drop of 0.4 million barrels. The API numbers the day before had pointed to a drawdown, so that's why we saw that reaction in the markets where there was a sudden drop in oil, although US crude has since recovered back above the $51 a barrel, and it's mainly due to hopes that there will be an extension to the current output deal, so that's been limiting the dollar's losses. And finally, at today's economic calendar, we can see it's going to be another quiet day. We had industrial orders out of Germany, which were slightly below expectations in February. Later in the US session, we're going to have the weekly jobless claims and building permits out of Canada. But apart from that, the only other thing to note is the ECB March policy meeting account. That's due to be published at 11:30 GMT. That's it from me. Thank you very much for watching and have a great day.